Hey everybody, Real Estate Ninja here. I hope you're doing great. Got a great story out of Wolf Street. It's about mortgage rate buydowns. It's happening in new home sales and it is trending massively. It is exploding in usage. Why? Because new home builders can't sell homes. So for every single person that thinks the housing market's hot, stop looking at the price. It's all over. So here we go. Out of Wall Street, it says right here, wallstreet.com, mortgage rate buydowns by home builders are now all the rage to prop up sales, lowering effective house prices in a big way, but don't get picked up by the house price data. Couldn't have said it any better myself. Home builders don't have the luxury of outweighting the market or waiting for the Fed to slash rates or whatever. They must build and sell homes. That's their business, no matter what the conditions in the market. One thing that you have to understand, especially builders that are building large tracts, many people don't know this. When they do their financing, they have different tranches where they get their money in different phases of the building process. They've got to be able to show the bank that they've finished the homes to a certain point, then they get another set of another bulk of money. But on top of that, let's say you're in a multi-phase development, they've got to sell out a certain percentage of their first phase in order to start the second phase. So builders have to be flipping homes as fast as they can. With any little hiccup, they're in trouble. Now, there are builders right now around the country that are doing, 5, 10, 20 homes, and they are finding themselves in really big trouble. Why? Because they are having to refinance for the next tranche of money that they need, and the rates are so exorbitant, it takes out all of the I'm completely blanking out and I'm live. Come on now, Ninja. Margin. All right, there we go. It says right here, and the market is struggling with 7% plus 30-year fixed mortgage rates and sky-high prices. After a ridiculous free money spike during the pandemic, sales of existing homes have plunged by 25% from the same period in 2018 and 2019, and by about 32% from the same period in 2021, because buyers have pulled back. So now look, home sales are actually worse than 2018, 2019, before the pandemic even started. Like, put aside just the craziness during the pandemic. We are now in a worse housing market, sales-wise, right? There's 25% less sales than what we saw in 2018, 2019. So do you see the whole end is nigh kind of thing? All right, here we go. It says right here, that's because buyers have pulled back and the people with 3% mortgages have left the housing market altogether because they want to move. How many of you right now, just a poll, type 1 below, have a mortgage around 3%, 4%, or 5%? You'd love to be able to sell your house because of all the equity that's built up into it and move into another one, but you can't. You simply can't take the equity and go buy something. Even if you moved out of state, it'd be tough because of the higher interest rate, the higher taxes, everything. I mean, I'm one of them. I would love to sell my house. I just put a bunch of money fixing it up over the last, actually the first year. So that was even before I started a YouTube channel, I was fixing it up. But my point being is I'd love to be able to take the advantage of that and sell it and go, but it's not going to make good sense, right? Not good fiscal sense. It says that plunge in sales might be okay with potential home sellers thinking that this too shall pass, but it's not okay with home builders. And they've been adjusting to this market by cutting prices, building at lower price points, buying down mortgage rates, and offering incentives such as free upgrades. The latter two, buying down mortgage rates and piling on incentives, don't show up in the prices of the homes until they sell. That's really important to understand that. So the pricing data that we have from the Census Bureau about sales of new single-family homes does not include the costs of mortgage rate buydowns and incentives. Now, under Freddie and Fannie government-conforming loans, there's only so much that a lender will allow you to spend on these kind of things, right? Cash back at closing, things like that, right? This goes for new homes as well as used homes, right? Older homes. So there's only so much you could do, but they're trying to max these things out just to get people in the door of these homes. Now, the duration of the buydown can be for a few years, which effectively turns it into a teaser rate that can cause problems when the rate jumps to normal. Now, think about this. I did a video, very little views on it, and I don't know why, on the sheer percentage of adjustable rate mortgages as of April of 2023 that are now hitting the market. It is phenomenal. 45% of all home as of April, $1 million plus loans are 45% are ARMs, right? From $400,000 to $1 million price range, We're sitting at a rate right now of all the mortgages being put out. We're at like 18%, 18.9%, sorry to be precise, of those homes are adjustable rate mortgages. So now think about this. You get these into teaser rates where it's just to get the person in, and they're barely making it already, but they're already thinking, oh, the Fed's gonna lower rates, Fed's gonna lower rates. We have a worldwide inflation problem, people. Like this, it's a big deal. And there are gonna be a lot of people stunned in the next, and this has been going on for over a year, in the next year or two, you're gonna have so many people stunned and they cannot make the house payment. All exactly like what happened in 2007. All right. Or the rate bite down, they say, can be for the entire term of the mortgage. It's permanent, but those have so much less bang for their buck because, in being that, let's say a home builder said, okay, we're going to buy down your rate. We're going to put $10,000 on this project to buy down that rate. Well, for 3 years, we can get you in for like 2 points less. Or that same 10,000 can buy down a half a percentage point for the entire term of the 30 years. So how many home builders do you think are going to be able to get buyers in just dropping the rate, getting the rate down a half a point? Not much. So you see where I'm going with this. More and more people are going to choose that 3-year term. This is exciting. The big home builders have mortgage lender subsidiaries that originate the mortgage for their customers and then sell the mortgage to government-sponsored enterprises such as Fannie Mae, which will securitize the mortgages into MBS. So those still have to follow in order to securitize those into mortgage-backed securities under the Fannie Freddie programs. They have to reach certain requirements. So they can only have so much money put towards buy downs. The consumer or the buyer still has to meet certain guidelines. The down payment has to reach a certain guideline, all of those kind of things. All right, so important to understand this. For example, the mortgage lender subsidiary of D.R. Horton is DHI Mortgage Company. Having their own mortgage lender makes rate buy downs a lot simpler for home builders. This is similar to the captive auto lenders such as Ford Credit offering 0% for 36 months financing for F-150s at the moment. And the reason why is because that's the only way they could sell trucks. They've got to give it to you at 0%. So we've seen this exact same thing play out in 2005 to 2008 as well, where these companies are going to be hurting here pretty shortly, especially if Fannie and Freddie won't securitize and buy up all these loans. It says, but the cost of buy downs don't show up in the national median price of the homes, new houses sold. The numbers are only showing the contract prices, July's median price and the 3-month moving average of the median price of signed contracts has dropped by roughly 12% from the peak of late 2022, according to the Census Bureau. Now, figure in the cost of rate buy downs and the prices would have dropped a lot lower. Again, we're always catching up for the government data to come out, the quarterly data, the annual data from companies when they're publicly traded, they have to tell you. It's just like everybody telling me Warren Buffett was buying and I was crazy saying the market was going to crash 3 or 4 months ago. And now we found out that Warren Buffett's a net seller and he has the largest cash hold just in this last quarter alone ever. And wait till you see what happens in Q3. It's going to be even more selling by Buffett. Why? Because he knows what I know and what you know. Market's tanking. Says concerning the mortgage rate buy downs, John Burns Research and Consulting, which among other things regularly surveys home builders, came out with an interesting note about mortgage rate buy downs by home builders in Florida. Based on its regular surveys of home builders, phone calls, community visits, etc. Plus, this time to supplement the data, our survey team visited 13 home builders, 3 land brokers, and a regional developer in Jacksonville and Orlando. John Burns chose Jacksonville and Orlando because they're more rate sensitive than other Florida markets that attract a higher percentage of retirees who pay all cash and don't need rate buy downs. Why does Florida matter? It's a big market. It's a boom market. When the boom ends and the bust starts, like in Florida, California, New York, get ready. That's coming to a city near you, even around the entire country, but it takes a certain amount of time. So it's a really good indicator. He says, in a prior note, John Burns said that 5.5% seems to be the magic number, and that makes home sales happen for home builders. This is what the survey found. But let me remind you, 5.5% mortgage rates right now is only based on today's insurance premium costs, the taxes on the property, and the actual property price itself. If any 3 of those increase, then you're going to need to see a rate of 5.4%, 5.2%, 5.1%. Why? Because all that matters to 99% of consumers, home buyers, is how much it's going to cost them per month. They never look at the long term. They go, oh, the house will always be worth more. Yeah, they also thought that in 2004 until it wasn't, till they lost it. And a lot of people just straight up walked away because the value was less. Point being is this: home builders are finding themselves in a lot of trouble. And so they are doing things like this that are so easy for us to identify to show us the market's crashing, it's tanking. Even though home builders need to keep giving incentives, I already know lots of people that are trying to sell homes in just my local area that are doing all kinds of things. Price concession, number one. Carpet and paint commissions, or, you know, the allotments. They sit there and they go, hey, we'll give you an allowance of $5,000 to put new carpet and paint in here. They're trying any which way to try and get people to buy their house. It's absolutely crazy out there. All right, with that being said, I thank you so much for watching. The Real Estate Ninja is out.